I've watched almost every video on UnitedHealth Group, ticker symbol UNH, in the past months, and here's my take if this is a generational opportunity or a deep value trap. I'm Eddie from Takleaway Alpha Mind, and in this video, we are going to deep dive into UnitedHealth Group and see what happened with these stocks and what you should consider with UnitedHealth Group. So let's get started. So first of all, I think that you know already why we're talking about these stocks, mainly because it has fallen like more than 60% from its all-time highs down to $237 today. And so basically, UnitedHealth Group is a healthcare insurance company, so in the US, so the biggest one actually, and it has two main core business lines. So United Healthcare, which is the actual insurance company, and Optum, which is actually the pharmacy and the care delivery side of the business. This is very important to understand that from the get-go because this is going to drive afterwards our analysis and our understanding of their business and why UnitedHealth Group is not just another insurance company and why this is the biggest one actually. So first, if we look at the insurance business, actually, it is pretty simple. I would say if you don't go very deep, it means that people are actually having medical expenses and they have insurance. So they have claims against their medical expenses, meaning that they want to get reimbursed and the insurance company is reimbursing them. So that's a pretty simple business, I would say, at the surface. But what happened for UnitedHealth Group and the whole industry actually, so in 2025, so they realized that people were actually claiming more than what they had predicted. So which means that they were not collecting enough premiums in 2025 to actually keep the same margin, given all the medical expenses requested by their customers. So this is why actually, so this is a whole industry-wide problems, and this is also why UnitedHealth Group actually declined a lot in the past months. The second pillar of UnitedHealth Group business is Optum. And that's what makes it quite unique because it brings synergies between the insurance business and Optum. So what is Optum? Optum is, I would say, the care delivery business of UnitedHealth Group. So UnitedHealth Group is insuring patients for their medical expenses, but also they have a whole business line with Optum to actually deliver care or deliver the treatment to the patient. So we have Optum or Optum Health, which is basically physicians, which actually provide medical treatments or medical advisory. And you also have Optum Rx, which is the pharmacy business, so very similar to what we can see with CVS. And you also have Optum Insight, which is more tech-related services that UnitedHealth Group is providing to a lot of different service providers. So as you can see, there are two pillars for UnitedHealth Group, so the insurance and the delivery business. And basically, this is where they are creating synergies within their business, and that's what made them unique and very dominant in the industry so far. Okay, so now let's try to recap a little bit what happened to UnitedHealth Group and why they fell minus 60% from their all-time highs in just a very few months. So actually, one of the first things that happened for UnitedHealth Group is that they were actually probed by the DOJ for billing or Medicare billing fraud. And so this investigation is actually going on at the moment, and this is actually a big weight on the stock. And unfortunately, like UnitedHealth Group could not catch a break, so they had one of their CEOs murdered, as you may all know already. The next CEO, or the CEO for UnitedHealth Group, not UnitedHealthcare, had actually resigned, and the former CEO came back, so Helmse. And so this change of leadership also actually shook up a little bit investors. So that's why the stock kept dropping. And very recently, so in the last earnings, so we've seen like quite a big drop in terms of earnings from UnitedHealth Group as they have suffered, like the whole industry, from higher medical loss ratio, which means that patients, they were claiming more expenses than what UnitedHealth Group has actually expected and how they priced their 2025 premium plans. And so all these events actually explain why UnitedHealth Group, so ticker symbol UNH, is actually collapsing in terms of stock price. And the sentiment today is very, very bad. And the reason why it actually caught our eyes and why this could be a possible opportunities or a very good setup is that the negativity around the name is so big that there could be a rebound anytime soon in terms of sentiment and in terms of narrative that could actually drive the stock higher. But for the moment, there are a lot of elements pushing the stock price down. So we've seen like a probe from the DOJ change of leadership, reduced earnings due to higher medical loss ratio, kind of politics also, because I think that not a lot of people in the US, they like their healthcare insurance provider. And so this sentiment around UNH makes them like quite difficult to actually approach for investors at the moment. So a lot of videos and a lot of people on Twitter and on YouTube have actually discussed this question. Is this a Meta 2022 moment? And kind of the consensus is that it is not. And a lot of people are making fun of others that this is not a Meta 2022 moment, that's obvious, these two are not comparable. But I think that people, they forget very quickly what happened to Meta in 2022 and what was the sentiment at the time. So at the time, Meta has very bad sentiment, very similar to what we can see with UNH, because people need to remember that at the time, like, Meta had first like a huge scandal with Cambridge Analytica, and it was clear for a lot of different people that Meta and Facebook, Instagram, they were not good for teenagers, they were not good for people, and so there was this kind of opinion in the general media that actually we should regulate social media and that we should not let Meta actually dominate the space because it was very harmful for a lot of people. But it seems that in 2025, people have forgotten that and that Meta 2022 was obvious for everyone. But also Meta at the time had problems with like Apple. So the fact that Apple changed their rules into their iOS 14 and that it actually kind of killed a bit the business of Meta. And that was actually a huge risk for Meta at the time. And people, they also forget that. And on top of that, there was a competition from TikTok going on. And so there was actually a lot of negativity on Meta at the time. And so people, even if they knew that Meta was a great company, same as for UNH, even if people know that it's a great company, the risk that the stock can actually be dead like for years, like PayPal, for example, is actually a risk that a lot of investors, they don't really want to take. And so I think that there are differences between Meta and UNH, obviously. I don't think that UNH can actually do a 8x or 10x like Meta has done, mainly because there won't be an AI wave to ride for UNH. But I think that same as Meta and same as what people could expect from Meta or could have expected from Meta in 2022, a 2x is actually not out of the realm of possibilities. And then, so if we look back at Meta, so Meta actually had a change of narrative very quickly when Zuck stopped doing its metaverse and tried to cut costs. And this is exactly what we've seen in Q2 2025 earnings for UNH. So a refocus from the new CEO, a refocus on profitable growth, refocus on margins, kind of humility back. And this is definitely like showing us that they are trying to turn around. And this is what we're going to see. What is the turnaround from UNH? The turnaround for UNH is actually going to come in 2026 and 2027. And it started with the change in terms of top management. So we've seen a new CEO and recently we've seen a new CFO. And what we've heard on the last earnings call is that they're going to really focus on profitable growth, not growth at all costs, and really focus on getting back their margin to the standard level of 5 to 6%. And so this means that we are going to see a lot of effort in terms of efficiencies. So the first part what they're going to work on in terms of improving the margins are obviously on their medical loss ratio and on the pricing of their premium plans. So if we start with medical loss ratio, I think that there are a lot of troubles among the whole industry, and I think that UNH is going to work a lot with physicians and also with the Optum division to try to mitigate this increase in terms of expenses. So control the medical loss ratio, control the medical expense that actually balloon in the industry. So that's the first thing. The second thing is that they're going to reprice their premium plans like everybody else. So which means that health insurance is going to become much more expensive for a lot of different people in the US. And this repricing is actually going to give UnitedHealth a little bit of breathing room to cover these higher medical expenses or medical claims. So definitely what we plan to see in 2026 and 2027 is a return to normalize our historical margin levels for UNH. Then the second axis where UNH is going to play a turnaround is about cutting costs and getting more efficient in the way they are operating. So they've already said that they're going to use AI and they're going to leverage extensively their Optum division to try to bring even more synergies and try to cut even more costs in their operations. So they've said that they are targeting $1 billion cost cutting so in their operations. And they're also prioritizing so what they call value-based care, meaning that different from fee-based services, so where you just pay for any type of expenses. And now they are trying to work with physicians, work with hospital to try to have a value proposition and the way they compensate so the patients and the physicians based on the outcome of the treatment that the patients receive. So it's a whole different approach. It's a bit more complicated in a sense, but it really encourages people to be healthier, and it really encourages the whole industry to actually limit the cost used to actually keep the patients healthy. And the last part where we're going to see a kind of a turnaround and a huge boost for UNH is going to be a buyback program that they've already started, but they're going to continue and most likely accelerate because UNH already has a lot of free cash flow available, so around 25 billion per year. And at the current stock price level, so they can actually retire a lot of shares outstanding. So what we can expect for 2026, 2027 is increased level of buybacks and increase of share outstanding reduction. So based on everything I've seen and everything I've heard, so another area where UNH is going to actually improve their margin is that they're going to exit some unprofitable areas in terms of insurance. And I think that a lot of players in the industry are going to do the same. I think it's a bit unfortunate, but the fact that some segments are really actually unprofitable are very difficult to manage for companies like UNH is showing us that most likely they're going to exit these markets where a lot of the pool of the patients are actually too sick or not able to actually pay the premium plans to actually cover all the expenses that they have. Okay, so you will tell me what's the investment thesis here. So the point with UNH is that all these difficulties are temporary and the stock is not a broken business, but a broken stock. And what we can expect from UNH is that in 2026 and 2027, the narrative is going to change completely, and that people, they will have forgotten all of these difficulties with the DOJ probe, with the murder, with the chain of management, and they will focus more in terms of growth and in terms of earning coming back. And what we can expect actually for 2026 and 2027 is that UNH is going to come back to their historical level of margin, so around 5 to 6%. Or if we want to be conservative, 4%. But the reality is that what we can target, I think, reasonably for UNH in terms of EPS in 2026, 2027 is around 20 to 22 for 2026 and 27 to 30 for 2027. So you should not forget that in 2023, the EPS was already 23. So which means that this is not impossible. It's not something that crazy that is going to happen if they operate well and they reprice correctly and they do all the optimization that they need to do in their business. So we can see EPS coming back at this level, so 22 in 26 and 30 in 27. And if we put I would say a reasonable multiple, which is quite average for UNH of around 17. So we can see the stock price going around 450 and 500 so in 2027. So this shows you that reasonably we can expect a double from UnitedHealth Group going forward if they actually successfully implement their return to EPS growth and their return to normalized profitability. So I think that same as Meta, there is kind of a huge path forward for improvement and a change of narrative, and this is what we are hoping for if we invest in this stock. And as you wait for 2027 for the stock to reprice and get back to normalized valuation, so you will be also gifted with a 3 to 4% dividend yield on your stocks, which is actually not negligible, and I think that pretty good point, and especially that a lot of dividend investors, with the rates or the interest rates coming down, they are going to search for companies like UNH, which are actually quite established, quite stable in terms of business, and that this is going to bring a lot of dividend investors into the name. and this is going to help the stock find support around the $250 or $300 level. We've seen a lot of opinions for UnitedHealth Group, ticker symbol UNH, and this is quite actually a battleground stock where a lot of people disagree on the fact that it will rebound quickly or not, or the fact that this is a good business. And so basically what we've seen today is that, yes, there are a lot of arguments, there are a lot of debate on the stock, but the reality of the figures and the reality of the business is that most likely the stock is going to rebound and the narrative is going to change in the coming years with the return to profitability at normalized rates. And so this shows that this is a very good setup for UnitedHealth Group, and this could be a very good investment for your portfolio. It's not financial advice, do your own due diligence, but this is definitely somewhere where you want to look at, because UnitedHealth Group has temporary headwinds, a lot of negativity in the stocks, very bad narrative at the moment, and very bad business results. But this is going to change very drastically in the years coming forward with an improvement in terms of narrative and definitely an improvement in terms of profitability and EPS. So stay tuned, and if you're interested in other analysis like this one, so please check my other videos, please subscribe, and I'll see you in another one. Bye.